Welcome to this explainer. So, did you know that the literal second you turn 65, you automatically move into a completely different taxpayer category? It's true. Suddenly, you qualify to have a whole list of everyday bills shrink, freeze, or even vanish entirely. But, and this is a massive but, there is a really good chance you're actually still paying them.
And here is the core trap we have to talk about right up front. Quote, nobody whose paycheck depends on collecting that money is ever going to call you up and tell you to stop. Think about it. The agencies that have been billing you for the last 40 years, they have absolutely zero incentive to notify you that you don't owe them anymore. I'm being blunt here because this is hands down the single most expensive misunderstanding out there.
You see, there is this massive gap between simply qualifying for an exemption and actually collecting it. The law doesn't just auto-refund you. Your county isn't going to mail you a nice little birthday check when you turn 65. Qualifying is basically meaningless unless you actively bridge that gap by knowing the break exists and filing the exact right paperwork. Real quick, here is our roadmap for today. We'll uncover the hidden senior tax trap, dive into maximizing your tax deductions, talk about slashing your property taxes, and find those Medicare and utility discounts. Then we'll walk through the Dorothy case study to see this all in action and finish up with your weekly action plan. All right, Section 1, the hidden senior tax trap, busting the income myth. Let's clear the air on this right away. We need to completely shatter the biggest myth out there, the one that is literally talking people right out of their own money. So many folks assume senior benefits are only for struggling retirees, or on the flip side, only for wealthy estate owners with teams of fancy accountants. Both are dead wrong. These exemptions benefit literally every single income bracket. Yes, even renters, because when your landlord's property taxes freeze, your rent increases slow down too. Well, assuming your landlord has a heart, of course. But really, whether you're living purely on Social Security or you're sitting on massive property equity, there is significant money on the table just waiting for you. Moving on to Section 2, maximizing your tax deductions, the new stackable bonuses. Get a load of this number, $6,000. Starting with the 2025 tax year and running all the way through 2028, every American age 65 or older qualifies for a massive new federal bonus deduction of $6,000. And if you're married and both of you are over 65, boom, that bonus doubles to $12,000 combined. Now, it does start to phase out at higher incomes, right around $75,000 for single filers and $150,000 for couples filing jointly. But think about who that leaves untouched, the broad middle class of retirees. For them, this is real, tangible money coming straight off the top of what the IRS can tax. But here is the absolute best part. This new $6,000 deduction isn't a replacement. It stacks. It stacks directly on top of the pre-existing senior add-on, which for 2026 sits at an extra $2,500 for single filers or $1,650 per spouse. When you combine your regular standard deduction, that long-standing senior add-on, and this new $6,000 bonus, a huge number of people over 65 actually owe way less federal tax than they think. Honestly, many owe nothing at all. The trap here is just habit. People keep over-withholding out of habit, essentially giving the government a huge interest-free loan every single year. Next up, Section 3, slashing your property taxes, the 3 essential forms. If you own a home, you must actively file these 3 separate, incredibly vital forms with your county to slash your property bill. The absolute key word here is actively. You have to raise your hand. First is the homestead exemption, which knocks a solid chunk of your home's assessed value right off the books before taxes are even calculated. Second is the senior exemption. This is an additional break that kicks in the year you turn 65, and guess what? The county will almost never volunteer to tell you about it. And third, the absolute holy grail, the senior assessment freeze. Now, state rules vary wildly here. Just look at Texas versus Florida. In Texas, a recent measure pushed the general homestead exemption to a whopping $140,000, plus a $60,000 senior add-on with zero income limit. Incredible, right? Meanwhile, Florida offers great exemptions too, but they impose a strict $38,700 income limit. So never assume anything about your local laws. But regardless of where you live, if you can score that assessment freeze, your taxes lock in. Your home's value could literally triple over the next decade, but your tax bill wouldn't budge an inch. Section 4, Medicare and utility discounts, bills you can stop carrying. Let's talk about those sneaky monthly bills. Does the number 2290 look painfully familiar? For 2026, the standard Medicare Part B premium sits at $22.90 a month, and it gets pulled straight out of your Social Security check before you even see it. Millions of people are paying this out of their own pockets every single month when their state should actually be footing the entire bill. Enter the Medicare Savings Programs. You might hear them called QMB, SLMB, or QI. These are state-run programs that pay your Part B premiums, and if you're in the highest tier, they even wipe out your deductibles and copays. And here's the absolute kicker. The income limits are way higher than most people assume. People hear the words assistance program and they instantly tune out, thinking, oh, I make too much for that. But actually, many states no longer count your assets at all. So your life savings or your paid-off house, they won't disqualify you. This is honestly one of the most underclaimed benefits in the entire system. And while you're looking into that, absolutely ask about Extra Help. It's a low-income subsidy program that drastically cuts your Medicare Part D prescription premiums and your actual medication costs. Scoring a Medicare savings program often auto-enrolls you right into Extra Help, instantly solving two massive healthcare headaches with just one phone call. Talk about a win-win. Also, let's not ignore the smaller numbers, because small bills add up fast. The federal Lifeline program can knock up to $9.25 a month off a qualifying phone or internet bill. And then there's LIHEAP, which provides direct cash assistance for heating or cooling your home. Sitting alone, $9 might not seem like a total life changer, right? But when you stack these modest, unclaimed federal discounts together on a fixed income budget, it makes a huge, huge difference. Section 5. The Dorothy Case Study, putting it all together. Let's ground all this theory with a real-world example. Meet Dorothy. She's 74, widowed, living near Sacramento on a fixed income, mostly Social Security and a small pension. Now her paid-off home recently doubled in value. Dorothy is your everyday senior, and she was legally overpaying in 3 entirely different directions, purely because nobody bothered to tell her she could stop. Look at this incredible before and after. Before filing any paperwork, Dorothy was paying the full Medicare Part B premium, she was watching her property taxes skyrocket on an unfrozen home, and she was overpaying the IRS every single year because her tax preparer totally missed her senior deductions. But by simply filing a Medicare savings application, the senior property tax exemption and freeze with her county, and a corrected tax return, literally everything changed. The state started paying her Part B, her property tax was drastically lowered and permanently frozen, and her federal tax bill zeroed out completely. Nothing about Dorothy's daily life changed. She didn't game the system, she didn't sell her house, she just formally claimed the money she had already earned over a lifetime of doing everything right. Section 6. Your Weekly Action Plan. Claiming what is yours. Let's get you set up to do exactly what Dorothy did. Before we hit the main steps, I want to drop 3 quick, high-value bonus moves for anyone with real assets or a recently deceased spouse. First up, property tax deferral. In some states, you can just choose to stop paying property taxes outright. The state settles up later when the home is sold or passed to heirs, which frees up your cash flow right now. Second, surviving spouse carryover. Make sure you file the right paperwork so you don't accidentally lose your late spouse's exemptions and watch your tax bill jump in the absolute worst possible year. And third, look into reduced vehicle excises and registration fees based on your age. People laugh at this one until they actually add up the savings. All right, here is your 4-step action plan for this week. Step 1, call your county assessor's office today, literally today, and ask for the homestead, senior exemption, and assessment freeze forms by name. Find out your specific deadlines. Step 2, call your local SHIP office. That stands for State Health Insurance Assistance Program. Ask them for a free Medicare savings screening. Step 3, when your tax return is prepared, double-check that those new stacked standard deductions are actually applied and adjust your withholding so you keep your money all year. And step 4, if you need help and you really don't want to pay a preparer, use the AARP Tax Aid Program or IRS Tax Counseling for the Elderly. These are IRS-certified volunteers who will literally sit down with you and help you apply these exact tax deductions, completely for free, no catch. Which leaves us with a really important, empowering question. What will you do with the money that has been yours all along? Remember, these rules vary heavily by location, so always verify your unique local regulations with qualified professionals or your local SHIP office before you make any major moves. But whatever you do, don't let this knowledge go to waste. If you found this explainer helpful, please share it with someone you know who is over 65. It won't cost a dime, and it might just put hundreds of dollars a month right back in their pocket. Thanks so much for learning with me today, and I'll catch you on the next explainer.